join us, have an opportunity to hear from Katie and get more information about what the changes in our current tax law are, and trying to keep track of all of those things that are moving at a very rapid pace, at the same time trying to figure out how to manage the things that are going on in your own building, in your own world, in your own business, and yet trying to figure out sort of how you can take advantage of some of the things that are coming along from either the federal government or the state government, any changes, so you can adjust your life a bit. This has been, as I'm sure you've all experienced, a very interesting, difficult time for everyone to try to manage where they're at with their employees and their team members, and also the bottom line in terms of their businesses that they've put, love and blood and sweat and tears for many, many years, and all of a sudden faced with, completely different circumstances than any of us have ever really faced. The only comfort I find in it is we're all in this together. So nobody really is coming up along with a blueprint saying, yeah, I've been here, I've done that, let me guide you through it. We're all kind of relying on each other to figure out the best way to go about it. We're, trying to figure out how we can learn what's coming out from the government and assistance and different types of programs, and what is the best thing for our, for us and our small businesses to take advantage of. When should we do that, and what would that look like in the future as well? So Katie, I'm going to call on you. Are you still with us?
I am still here.
Okay, it is 10:04. We are going to amp up. I'm going to move you to, I'm going to try to see if I can change you to be the host, and then you will be in charge.
Okay.
Which, knowing that you were a past chair of mine, I know putting you in charge is the smart and right thing to do. So I'm going to make you the co-host. How about that?
Oh, good. Oh, this is like old times, Deanna.
It is like old times. Yes, it is.
We're getting the band back together.
We are. I will sing a tune. Don't think I won't. Okay, Katie. Katie Eyre with tax accountant. I won't get your title right, but tax partner, from Fordham Co and probably one of the smartest accountants I've ever met, understands tax law, and the beauty of it all, she can actually interpret it into something that we can all understand as business owners. So Katie, welcome, and thank you for being our first guest on our Small Business Solutions series. Welcome.
Well, thank you. I'm going to do my very, very best. This is COVID-19 in the year 2020 focused on tax law and some of the things that happened. And I can tell you that all of this has been coming at us at breakneck speed. And everything I learned last week has changed again. And so we're going to do our best to go through on it. I'm not going to be able to go in depth on a lot of things, but I'm going to be able to mention it to you. And at the outset, I just want to tell you, anything I tell you, you need to check with your specific tax advisor. And I also think there's 3 people with what I'm going to talk about, 3 professionals that you're going to need to lean on if you have a small business. 1, it's your tax advisor. 2, it's your banker. And 3, your payroll/HR professional, whoever is doing that for your company, because a lot of things that we talk about that the government has put in place impact your payroll and impacts employee retention. And one of the questions I've been getting from a lot of clients is laying off versus retaining, and a lot of the helps that have been provided through some recent acts are geared towards keeping our economy going, which also largely means keeping our employees employed. So whatever that looks like to you, there's a lot of things. I will say in the Stimulus Act, and we're going to get into this in a second, the Stimulus Act, as I've been drilling down on it, a lot of it is, it seems like a TV commercial, infomercial, where you read something and they're giving you something, and then there's like, but wait, there's more. And then they give you something else, but wait, there's more. But they're all very complicated and they need to be hobbled together. And some you can use with other elements and some you can't. So I'm going to tell you what I know at this moment. And there's a lot of ambiguity, as there often is in tax law. And in general, we have Congress or the states, whatever, they put something together for us as tax law or a law, but the actual administration of it, where the rubber meets the road. How do we implement it? How do we get loans out to people? All of those things. The implementation and administration of it needs to be figured out after the law has passed. And so we have some of these helps that we're going to talk about, but how they're actually done is still a little bit up in the air, and there is still some ambiguity. So I'm only going to be able to express to you what I know at this point. So given that latitude, check with your advisors, be in good contact with your tax advisor, your banker, and your payroll/HR people to find more information out. You're also going to see me glance to my other monitor because I kind of put some information together, and then I have some stacks of things I've put together that I've been researching on and studying. So forgive me for having various cheat sheets around. So having prefaced all of this, here's what we're going to talk about. We're going to talk about a lot of things encompassed in three things. One is tax filing and payment deadlines that have been put together. And then we're going to talk about two primary laws. The first law was came into place on March 18th, and that was the Family First Coronavirus Act. The second law is called the CARES Act. That's also known, I think, actually aptly named. A lot of times these acts are not aptly named. The CARES stands for Coronavirus Aid, Relief, and Economic Security Act. Both of these acts include things to help with the virus itself, getting testing out more, getting more money to our healthcare folks and all of that. But inside of them are helps for individuals and businesses to get cash into our pockets as quickly as possible to delay an economic catastrophe. Tax law, a lot of people, it doesn't make sense, but from a social policy perspective, a lot of tax laws put in place to kind of prevent a certain problem, help something, all of that. So first thing we're going to talk about is the tax deadlines. And we're not going to spend a lot of time on this, but a lot of people are interested in it. The federal government said for any tax filings or tax due on April 14th is now extended to July 15th. That stands for your 2019 tax filings that were due on April 15th, and also your Q1 estimate for 2020, which is due April 15th. Those have been extended to July 15th. Oregon came along and said, okay, we agree with the federal government on 2019 filings. So if a tax return is due April 15th or May 15th, that's basically individuals, trusts, and C corporations, those filings for 2019 are extended till July 15th. They didn't agree, though, with the first quarter estimate for 2020. So if you have an estimated tax payment due for 2020 for Q1, at this moment, it is still due April 15th. If you have a business that is subject to the corporate activities tax, CAT tax, that estimate is still due for the first quarter on April 30th. However, Oregon has signaled that they are going to be somewhat benevolent in not penalizing you if you don't pay in enough, as long as you've made a good faith effort. I don't know what that means, what a good faith effort is, but Oregon is recognizing they need to get the cash, you need to pay it, and they're trying to be nice. California, if anybody has any California businesses, some of us are multi-states. California said if you've got a tax filing or payment due 3/15 through May 15, it's all due July 15 now. And they also agreed with the federal government on the Q1 estimates, that your Q1 estimates in California are also deferred till July 15th. Portland City, Multnomah County, some of us have filings there. TriMet, they all agreed to follow Oregon. So we've got follow the leader here going on. Therefore, if you have a return due 4/15, it is now extended to July 15th for 2019 filings. But your first quarter estimate to Portland City, Multnomah County is due 4/15 still. Also, I didn't mention the arts tax. If you have a Portland arts tax, that's also extended till July 15th. So that's on, there's every state, if you file in other states, you need to look up those specific states and see what they're doing. for this. The legislature, the Oregon legislature's meeting, I think this week, they have a real cash issue. So I have a heart for where Oregon is on, you know, why they're still looking for the cat tax and the first quarter estimates to come in. I get that because they still need cash flow. So we'll see. Things change, they can always change again. So we'll see where that gets to. I don't know, are we taking questions now, Deanna, or should we wait till the end?
Well, we can certainly do it however it makes sense for you. Can you still hear me okay?
I can.
I'm asking folks to maybe put it on chat, and then
okay.
if there's questions that I see come up, I can have you answer them as we go. The idea was 30 minutes presentation, 30-minute Q&A after you kind of lay out all the rules and regs.
Well, I better go.
You better go, girl.
I better go because this was the easy part.
Excellent. Well, I'll let you go, and then I'll keep track on the chat of
Excellent.
Questions that we can come back around and you can answer for us. How about that?
Excellent. Because I think there's nothing more exciting than listening to a tax accountant talk about taxes. And so sometimes I wonder about myself, how I stay awake. So so when we talk now, let's go into some of the tax helps that have come about recently. There are some that are focused on business and some that are focused on individual and family relief. And not all of it is specifically tax focused. Some of it is on loans, and I want to bring those in, but I'm not going to dwell a lot on the loan relief except for one. But I think because it's important and time is of the essence on some of this, and it's complicated, and you're all going to have to figure out what makes the best sense for you. So businesses, they kind of offered relief, and I'm not talking the large, large corporations, publicly traded. I'm talking business relief for our members of the Chamber of Commerce that are on this call. And the business relief was, they gave basically 3 different types of relief. They've given a bunch of loans. Most do not require collateral in this emergency situation. Some are partially or wholly forgivable. And those are very good, and they're lower interest, and they're offering some subsidies on deferral of some loan payments as well. They're also doing it by way of payroll tax credits, making the tax credits refundable, and also providing extensions of time to pay your certain payroll taxes as an employer. And then they also provided tax relief through specific tax provisions, and some of those give you an opportunity to amend your 18 and 19 tax returns and possibly get some cash back. For individuals and families, what they've done for relief is they've given, we've heard that, you know, the star of media is the cash rebate. So we've got this cash advance that's coming out here within the next, couple weeks to months, depending, to most people. But it's really a 2020 tax rebate, and they're just giving you a cash advance now. They've offered some retirement plan relief options. They've also offered some mortgage forbearance and some housing relief to protect you from, at this time, of evictions and foreclosures. And then they've also offered some tax relief provisions to individuals. So that's how they've gone about providing helps. Let's talk first about business relief. So loans, the loan programs that I've been able to identify that they're offering are all SBA loans. You can go to sba.gov and learn about some of the loans that are related to COVID or emergency disaster relief. But what you need to do for these SBA loans, pretty much, hopefully you have a relationship with a banker, and I would be getting on the phone with those bankers now. Here's the problem, what we're understanding. Some of these loans, one is paperwork is not available, the applications are not yet available, and they're going to take some time, and banks have a unique issue going on right now with having enough bank employees available to assist, because they are dealing with their own socially distance and all of that kind of stuff that's going on. So you need to call your banker right away, get in touch with them, see where you get in line, because when I talk to you about the Paycheck Protection Program, which is the darling of them all, you're going to need to get in line through. Let's talk about the Paycheck Protection Program right now. That's in the act, $350 billion was set aside for this, and it's geared. Let's talk about who's eligible. For the most part, it's businesses and nonprofit organizations with less than 500 employees. Some specific industries can have more than 500 employees, but for the most part, it's less than 500 employees. You can get this loan equal to 2.5 times your average monthly payroll for the prior 12 months to getting the loan. And so basically, what was your average monthly payroll? There are some specifics of what's included in that average payroll calculation. For example, employees over $100,000, that excess over 100 doesn't count. But you know, if you've got a average monthly payroll of $100,000 for the prior 12 months, you can get a Paycheck Protection Program loan equal to equal to 300,000, which is 2.5 times your, $250,000, which is equal to 2.5 times your average monthly payroll. The maximum loan can be $10 million under this program. The interest is no greater than 4%, and the term at the end of this forgiveness opportunity, which I'm going to talk about, is no longer than 10 years. The loan fees are likely for most of us going to be at 5%, but if your loan is greater, is in the higher range, it can be as low as 1%. So you have to figure out on 5% loan fee for most of us. The payments on the loan can be deferred for 6 months up to 12 months. And it is designed, this Paycheck Protection Program is specifically designed to be forgiven. That's the key, to be forgiven partially or wholly. And it's and what they are looking for is the amount that can be forgiven is equal for during the 8-week period after funding. It's to be forgiven in an amount that equals the sum of your payroll during that period of time, your mortgage interest during that period of time, your rent, and your utilities that you pay during that period of time. And so for most of us, this is free money, except taxpayers pay it. But for your business, it is the darling of all the loans because it is designed to be given to you and to be forgiven. Now, if you take out this loan and you don't qualify to have it 100% forgiven because during that 8-week period, payroll, rent, mortgage interest, and utilities don't total the amount of loan you've given out, you're going to pay on that loan, but it can be over a period of up to 10 years. It will cost you your loan fees. I'm not positive if the interest is also forgiven, which is at 4%, but it is meant for you to earn forgiveness within 2 months of taking out the loan. This loan was supposed to be made available for applications in a very short period of time, like within a matter of days after the passage of the act last Friday. But what I understand is the applications are not yet available, and the SBA is saying it's going to be about a week. Banks are saying it's going to be longer. But this is perhaps the cherry of all the programs because it doesn't require a business to have shut down, doesn't require a business to have loss in revenues, doesn't require any of that. It's saying keep your people employed. It's about employee retention, keep your people employed, go get this money, and help yourself stay, because you might be good now and you might not be good in a few months. So this is the darling of it. And I would be calling your banker and saying, how do I line up for it? So that's the Paycheck Protection Program. There's some other loan programs out there. There's an emergency government disaster loan. It's an SBA loan, again, for less than 500 employees. It includes sole proprietors and ESOPs. There's no personal guarantees required on the loans for less than $200,000. And it appears that until the Paycheck Protection Program is available, you could get this loan and use it for payroll. But once the Paycheck Protection Program loan is available, which is when they start making applications available, you can't use this emergency government disaster loan for payroll anymore. A business, yes?
Can I interrupt just for a second? I'm just going to ask everybody to mute themselves. Since I'm new to this technology, I don't know how to do all of us without losing you, Katie. So if everybody could just take a second, mute their background noise, that would be really helpful. Thank you. Sorry.
Well, I just want to see somebody with their kids running around in the back. and go viral. Dogs barking. So again, on the emergency government disaster loan, you can get, just even for applying, when you apply, you can immediately ask for a $10,000 advance to maintain your payroll, and you are not required to repay it even if your loan request is denied. And so if you are really in need of help, apply for this loan to get a $10,000 advance to help with payroll. That's something you can do. Then there's some subsidy loan payments available for SBA loans that are 7A type loans. That would be something you should talk with your banker about, but there are some opportunities for that. So that I'm not a loan expert. I don't plan to be a loan expert, but these are very important helps, particularly that Paycheck Protection Program. Again, I urge you to contact your lender if you've got one. Hopefully they're experienced with SBA loans, and see how you can tee yourself up. What information do you need to get together? Start calculating what you qualify for, what is best for you to ask for a loan for all of that, and get yourself teed up so you're first in line when the applications become available. So, excuse me, I'm gonna have some coffee.
So, Katie, let me just ask a couple of questions that have been posed.
Yeah.
So the first quarter taxes federal for S Corps is extended to July 15th. Is that correct?
No, S Corps were due March 15th, their tax return. And S Corps, unless they have a built-in gains tax, they don't pay taxes. If you are an S Corp shareholder and you pay estimated taxes based on your S Corporation payroll, you're an individual. In all likelihood, your quarterly estimate at the individual level is due to Oregon April 15th, due to the federal government July 15th.
Great. Is the payroll loan on a first come, first served basis?
The Paycheck Protection Program, I believe, is, because there's only I think it's actually $349 billion set aside. I don't have enough zeros on my 10 key for that, but I think it is a first come, first serve. So when the money that's set aside is out, I think it's out.
Excellent. Thank you.
Okay.
Are the payroll first quarter taxes due tomorrow? No.
Excuse me, payroll taxes, I don't believe there's any extension on payroll taxes due. So you should still pay them unless you get into some of these other payroll credits and deferral programs that are available. We're still working through on the timing of some of those, but what I was talking about were income taxes only, not payroll.
Excellent. Thank you.
Okay. Let's see. So let's talk now about some tax relief provisions that were put in related to business. You may have, I don't know how many of you have non-residential buildings that you've put improvements in. If you put an interior improvement into a non-residential building, your office space, so on and so forth, there's a good chance after the 2017 Tax Act that you probably were forced to depreciate it over 39 years. There was a snafu, a technical, they left something out technically in the law where you otherwise should have been able to have immediately expensed it, but they left something out. This law threw us a solid and they corrected it. So if you did anything in 18 or 19 and now in 20, an improvement into the interior of a non-residential building, you used to have to depreciate over 39 years. Now you can take immediate expensing. You may be able to go back and amend your 18 or 19 return if you've already filed it and get some money back potentially. Deduct it immediately, and this stimulus bill actually allows for that. Talk with your tax advisor on that. Net operating losses. Again, with the 2017 Tax Act, they said net operating losses could not be carried back and they could be carried forward indefinitely. This law said for 2018, 19, and 20, if you do have a net operating loss, you can carry those back 5 years. And so that's great. So you can go back 5 years, and if you had taxes that you paid, you can get those, that refund back on those now. If you have to carry forward a net operating loss after the 2017 Tax Act, you can only carry forward the net operating loss and really only offset 80% of your income in that year that you carry the loss forward to. This Tax Act said you can actually now carry it forward to 100% of your taxable income for any losses that you made in 18, 19, or 20 can now offset up to 100% of your taxable income. That's a big one. I'm going to talk briefly on the next one, the next tax relief, which was something called an excess business loss limitations. We didn't have a lot of clients. I think we had 1 or 2 that this applied to. And what that means, if you were an individual and you had business losses more than $250,000 or $500,000, depending if you were single or jointly filing. These are business losses that are, you know, you've got this excess loss. You could only use $250,000 or $500,000 against your other non-business income, and the rest just carried forward. That's been suspended for 2018, 19, and 20. So if this applies to you, amend your prior year returns and get some money back. And then this applies, you typically see it in, this is about business interest, the next part I'm going to talk about. You typically see it in people that have rentals, but you see it in other businesses too. It's what the 2017 Tax Act said was if you had interest in your business, you were limited, or rentals, you were limited to deduct only 30% of your business income, and the rest got carried forward. This act now says 50%. You can deduct up to 50% of your income in interest. So again, if this applies to you, you probably have a tax advisor that you're going to want to talk that over with. So these are complex, and you usually see that with businesses that have an extraordinary amount of debt, which may be all of us soon after this COVID issue. So anyway, that's some of the tax relief that impacts businesses. Let's move on to payroll credits and deferrals. There's 4 of them that I'm going to talk about. And these are mostly geared towards keeping your employees and not laying them off. Some questions are, should you take advantage of these or should you lay off? We don't know what is going to happen with employers' experience rating on unemployment insurance, if there's going to be some benevolence granted to us as a whole, because there's a lot of layoffs. And particularly if the government said, shut your business down, you know, it's kind of penalizing you because you can't keep your employees employed. Some of these credits and deferrals, most of them are aimed at trying to keep your employees on your payroll rather than on unemployment. And so we're going to go through on these. The Families First Coronavirus Response Act initiated something called 2 things, the Emergency Sick Pay Leave Act and the Emergency Family Medical Leave Act. And this does not go into effect until April 1st, but it is for your employees. You can receive a credit if you have employees that fall into one of 2 buckets. One is the employee themselves has come down sick with coronavirus, waiting to be diagnosed, or are required to be quarantined even though they haven't been completely diagnosed with it. The doctor says quarantine yourself. They can qualify for up to 2 weeks of sick leave. By the way, if you are an employer and you have employees, the Department of Labor issued a poster that you are required to post. It came out March 25th, last Wednesday. You are required to post that, like you are required to post some other things related to what I'm talking about right now. If you don't have it already, get one from your HR or go to the Department of Labor, see if you can download one and post that. That's a must do it if you have employees. Okay, so if you have a sick employee, that's one thing. They can qualify if they're sick up to 2 weeks of sick leave, and you are not allowed to require them to take their PTO or sick leave prior to this mandatory 2 weeks. And they can get up to 100% of, they can get a credit of 100% of their daily pay, up to $511 a day, and that's for 10 days. And I'll tell you how you get this credit back. So that's the credit for them if they're sick. If you have an employee who is required to take care of a sick family member, or they have children that they have to take care of because the children's school or daycare has been closed, that there is no other daycare available, and they are not able to telecommute, they also can qualify for up to 10 days under the Emergency Sick Pay Leave Act the credit that you can get for them is equal to 2/3 of their daily pay, up to $200 per day for 10 days. So that's that credit. That's the Emergency Sick Pay Leave Act. The Emergency Family Medical Leave Act says that for employees that, not that they're sick, but that they are required to take care of a child because of school is closed, daycare is closed, no childcare is available, and they are unable to telecommute, you can get a credit if you keep them on your payroll, again, equal to 2/3 of their daily salary, up to $200 per day, up to $10,000 per employee. So these can add up really fast if you keep people on your payroll. Here's how you get the credit back on these. You get the credit back on these dollar for dollar that you pay them up to those limits. When you, one, have a payroll deposit that's due, April 1st or later, I believe. And then also there's a true up when you file your quarterly payroll tax return for the amount of the credit you haven't yet received through payroll deposits. You get it back on your quarterly report. And I believe that at that point, you'll get any excess credit refunded to you at that point. These credits are refundable. So if you have an employee that you're paying, let's say you're paying them $300 a day as their salary, you can get $200 a day credit for that. So you're out of pocket the $100. In addition to the salary, you also get a credit for the insurance the health insurance that you pay for these employees during this period of time under these acts, on and on. You can see why I said you need to talk with your payroll/HR people, because these become very complicated very fast. There's another credit that's available, employee retention credits. I'm going to go to a little bit of a cheat sheet on this one because the employee retention credit is equal to 50%, if I'm not mistaken. I thought I might have had a slide here, but I don't. The employee retention credit, oh, actually I did write, is that it's for a business that was fully or partially shut down, as we've been facing here in Oregon, or you weren't shut down, but you have a decline in your gross revenue of 50% from the same quarter last year. So if you qualify for that, if you meet that criteria, you qualify for an employee retention credit. And that credit is equal to 50% of the wages you pay to an employee, up to $10,000 per employee. And again, these that 50% of the wages you pay them, it's refundable, and you get back against your payroll taxes that you will pay. This is federal, not state or TriMed, any of those other local taxes, but you will get it back. Again, keep your employees employed, and that's for businesses that are facing partial shutdowns or a big drop in receipts, gross receipts. Then there's another help that they've provided through payroll, and that's if this is for the employer share of the 6.2% Social Security tax, and also for self-employment tax. I haven't drilled down on the self-employment portion completely yet, but what this does is this allows you to defer payment of those taxes until 50% is due December 31st, 2021. And the other 50% is due December 31st, 2022. So they're going out there on it. I caution against these deferral payments because the debt still hangs around and you have to pay it. It isn't a zero interest loan. So if you are confident in your ability to have cash and manage it, why not defer it? But if you, if you aren't confident that you're going to have the cash, I would caution you to defer it, because that tax won't go away. It'll still be there. So that's the big ones on the payroll credits and deferrals. So they're given a lot of help for you to retain your employees and get payroll tax credits refundable, and then also to defer some of your payroll tax portion that you owe out there. It's very technical. We're looking for some guidance on, there's some ordering rules on this. So your payroll company or your HR company is probably going to have a lot more information on this. we're still drilling down on the ordering rules and what that all means. So again, sorry, this is very technical, but it's really a very helpful thing. Let's move a little bit into individuals and family tax relief. The individual 2020 rebate, that's the big one. We talked about that before. Just to be careful, a lot of us have friends and family as well. This $1,200 per taxpayer or $500 per dependent who is below 17 years of age. Those, the cash is going to be coming out either through direct deposit or in mail for the most part in the next short while. But it really is a cash advance, because it is really a cash advance against a credit that you may or may not get on your 2020 tax return. And so when you file your 2020 tax return, what is clear is the credit that you qualify for in 2020 up to this amount. And if you're high income, you will lose some benefits. And if you don't have a dependent in 2020 that you might have had in 18 or 19, you'll lose some benefits. But if you, whatever credit you qualify for in 2020, if you didn't receive enough of a cash advance, you'll be able to get that as a credit against your other taxes or as a refundable credit rebate. What isn't clear is if you receive too much in a cash advance, do you have to pay it back with your 2020 return? That isn't clear yet. It's not really addressed in the tax law. So we'll see what comes out. Some guidance may come out about that. We'll see how the IRS is going to handle that. So that's what's going on with the 2020 return. The hope is that, you know, people will spend it. As I've counseled my daughter and her fiance when they get theirs, hold on to it, because we don't know how long this is going to go on for, and they may need that cash. There's some retirement plan relief as well that's out there. So if you are required currently to take your minimum distributions out of your retirement plans for 2020, you aren't required to take your minimum distributions. So if you don't want the cash, don't take the cash. It'll reduce your taxable income in 2020. You can borrow up to $100,000 from your retirement plan within 180 days of the enactment of CARES Act, which is double the prior limit, which was $50,000. So you can borrow from your retirement plan of up to $100,000. And I believe that is only your employer provided retirement plan, not your IRA. You can also, now here's the interesting thing, if you have a retirement plan at all, you can withdraw up to $100,000 from your retirement plan before December 31st, 2020, and not be subject to a 10% early withdrawal penalty. And so you can take it out without paying a penalty. Now here's the beautiful side of it. You can report the income immediately, or you can report in 2020, or you can report the income over a 3-year period of time. So it will, you know, basically 1/3, 1/3, 1/3. So you get some deferral on paying the taxes, but you also get to repay the amount or any portion of it within this 3-year period and not be subject to any tax on the withdrawal. So in order to qualify for this, though, the taxpayer or the spouse has to have been sick or with COVID-19, or they faced a hardship related to it. They've been furloughed, laid off, lack of child care, and their kids, you know, all those other things we talked about. If they face a hardship, then they can take up to $100,000 from their retirement account, not face a 10% penalty. They're going to be taxed on it over 1 to 3 years. Or if they are able to pay it back within the 3 years, they won't be taxed on it at all. So it's you know, economically, you might lose some deferred growth of the $100,000 sitting in the retirement plan, but it could in fact be a 0 interest loan to yourself. So that is available as an option. And I think that for the most part is what I wanted to talk about. There are some other things in there. For example, student loans, you know, an employer can pay student loans. There's a little bit of mortgage. Let's talk about okay, I want to talk about two other things. Charitable contributions. We need, the government can't do it all, although they're doing a lot here with made up money. But it's designed to help us through the CARES Act. It's designed to stop us from going further down wherever we are. So whether it's a right or wrong economic policy, I don't know, but they can't do it all. And so one thing they noticed is that they need us to give more charitable contributions out. And with the 2017 Tax Act, only 8% of the tax filers were itemizing their deductions. Most were now taking the standard deduction. Great. Except for it has had a somewhat negative impact on charitable contributions. And remember, charities tend to do what prudent businessmen wouldn't do. And so because of that, our charitable organizations are a big part of taking care of the social net that we have for various things. So what the CARES Act did is it did two things related to charitable contributions. One is corporations are typically, not S corporations, but C corporations are typically limited to 10% of their taxable income in any one year that they can deduct. They've raised that temporarily up to 25%. But for individuals, what they did, they said, if you don't itemize your deductions, you can still deduct from your income $300 of a charitable contribution. So that's a little bit of a help. But it also said for those that do deduct or do itemize their deductions, they've been limited on cash deductions up to 60% of their adjusted gross income. They have temporarily allowed it to be 100%. So I actually have one client in mind that I think would want to give 100% of his income away. 100% of his income away. And I'm going to talk with him about this and see if it makes sense for him. So that's a couple things I did with charitable contributions. And then here, let's talk slightly about mortgage forbearance. They have, if you've got a residential mortgage on a property, you can apply for 180-day forbearance with your lender. And the normal fees and interest will still accrue, and it can be extended another 180 days at the request of you as the borrower. But you can also say, I don't need 180 days. You can be shorter. And then bank can't initiate foreclosure for 60 days beginning March 18th. So there's some help there if you have a home. If you're a multifamily borrower, so you have some rental units and the mortgage is federally backed, and you're experiencing some COVID-19 related hardship, you can request a forbearance as well. Those are 30 days. You can request a 30-day forbearance with an extended 2 times 30 days. But you have to be current on your obligation as of February 1st. And let's see. You also know that there's been a stalemate, a hold off on any evictions at this time. And as we have both state and now federal laws, temporarily federal law doing that. And that's what I wanted to say about those things there. So I think there's lots of little things, but those are the big ones that I've hit on at this point. So happy to chat about anything or answer any questions.
Thank you, Katie. I would just suggest we have about 15 minutes left. So if folks have questions, now would be the time. I'll just tell you to go ahead and unmute and assume that we're all going to be civilized about that. The one question I had, and I'm not sure if I just missed it, is the SBA $10,000 grant that's available.
I didn't discuss the SBA $10,000 grant. They have, are you aware of a separate $10,000 grant?
As I understand it, there's, and that one will be applied for at the bank. The other SBA loans are directly through SBA, as I understand it. But the $10,000, you actually go to your bank and fill out the paperwork, and it has some limitations. And it's, I think it's just a straight $10,000 grant that you can get if you need it for payroll or things like that.
Exactly. That is that immediate cash advance, I believe, that I mentioned on, and that can be used for payroll, and that is because it is a grant, is not required to be repaid back. But it may require you to actually also apply for the loan. That I don't know.
I understood you couldn't do both.
It's one or the other. We'll see.
One or the other.
There's the, well, okay, let me see what this act creates new emergency grant to allow a business that has applied for a disaster loan to get an immediate advance of up to $10,000. So you might be talking about something different. But
And maybe I should just leave the accounting stuff to the accountant. How would that be?
you know what? This is where people who are interested should get on the SBA.gov and talk to their lenders.
Right.
Because so there's a couple things that allow for in coupon talk stacking of these benefits, and most do not. And this very well may be one that requires a certain stacking or not. I'm not sure.
Excellent. So does anybody have a question for Katie? Well, I think everyone is completely mesmerized.
Oh, or numb.
No. It's so much information, and I really appreciate that you've really helped kind of created it in sort of digestible bites for us, because I think it's like 800 pages, if I'm not mistaken.
It's unbelievable. I could tell you, let me see, because I've had it up here. Well, it depends how big the font is. 247 pages is what I'm showing right here. So, but I think it depends on how big your font is.
I have a question. Can you hear me?
I
Yes.
can hear you.
Okay, this is Christy Wilson. I work for the city of Hillsborough. Would it be possible for you to share a PowerPoint that kind of summarize what you said is my first question. And two, for organizations trying to help support small business in alignment with the chamber and these conversations, would you recommend just directing small businesses to the SBA website then for these programs?
Yes, I recommend, what I would recommend for small businesses, first off, they need to talk with the three people, I will reiterate, even if they're small, they should be talking with the bank. They should be talking with a tax advisor of some sort, and they should have a payroll or HR person as well. If they have any employees, they should have an HR consultant around. Very important right now because of the technicalities. But in general, the SBA.gov, I think a lot of these agencies are doing a great job with COVID relief, and the SBA.gov is one of them. The IRS.gov also a little bit slacking, but the IRS.gov also has a COVID relief page. They like to not tell you a lot of things, but they may have some helps there. And I would also like to say the Chamber of Commerce has done a great job of pulling it all together too, and I think that they're going to keep adding to it. So I would suggest those. But I would really tax advisor and banker at this point. Call them up.
Katie, there's a question from Glenn Healy. To clarify, you stated the RMDs are not required for 2020. Is that correct?
That's correct.
Excellent. So just to reiterate, or the RMDs sometimes are used for charitable contributions. Do you get sort of a double benefit from that if you were to go ahead and take your RMD and then provide it and give it to charity?
It can be done for up to $100,000 a year, and that folks that are charitably giving and they have to take an RMD and don't need to live off of their RMD. Many people do, but those that don't need to, it is a great way to lower your overall tax bill. It is not a double whammy in the fact that in light of COVID, you don't get any more or less benefit doing this. And folks that are so inclined to do this, typically they are recognizing the need is great right now, so they're probably going to want to do that anyway.
Other question?
I have a question. Can you hear me?
Yep.
I can.
Do you know how the SBA is there a calculation of need for these payroll loans, or is it going to be like the wild west, first come first serve?
So
first.
I don't know on the, let me see what I can find on the you're talking about the the Paycheck Protection Program loan.
Yes.
What I would recommend you do on that for the tax-free portion, I would recommend that you calculate internally what you are going to need for payroll mortgage interest, rent, and utilities over that 8-week period. Calculate what your cost is going to be, and then that's the amount of the loan that you can count on being forgivable if you get it.
So my question, I guess, is, we're property management.
Mm-hmm.
We're scared to death to know what kind of rent is going to come in.
Yeah.
At least this month, not, and even next month's even more scary. But how do you calculate what you need if you don't? We have no idea what we're going to need in May, obviously, but April we're calculating worst case scenario. Is that what we should do? Or
so for the Paycheck Protection Program, that is not based on need. The debt forgiveness portion is not based on need. That one is based on for the forgivable portion, that one is based on what you actually will have incurred for those components. But based on your need, I was just reading this morning an editorial that Dan Mason wrote. If you're in property management, I don't know if you know Dan Mason, trying to call on the state to quickly offer rental vouchers for rental assistance. We'll see where that goes to, but maybe the legislature will do that, and that will help with getting some cash flow into the landlord's coffers immediately. But I think as far as the loans go and how much you're going to want to apply for, I think you need to talk with your lenders about it. If you are so disciplined that you will be able to hold on to the cash if you borrow it and are willing to pay the fees and the outstanding interest, but you'll have it as kind of a safety net, that might be a good way to go so that you can meet your lender requirements. But you also need to look at what are your financial covenants of the landlord doing? Are you going to run afoul? Are they HUD loans? All of that. So again, there's some forbearance opportunities with landlords as well for federally backed loans. So if they're HUD loans, I don't know if your mortgages would be on your properties, but if they're HUD loans, they do have some forbearance opportunities here.
okay, thank you.
All right, we have about 6 minutes left. Any other questions? Katie, in terms of timing from the federal government, we're always kind of a little bit skeptical in terms of how quickly they can move. But I was on a phone conversation with or conference call with Senator Merkley, and he was asking his staff because the question came up in terms of time frame, and the staff member said, a month, and he said unacceptable. So are you thinking that in terms of, I've heard like 3 weeks for the individual dollars into your pockets, $1,200 to $2,400, that would happen within 3 weeks? And in terms of when you think the SBA loans and forgiveness programs are going to be available in terms of on their website, they're not currently there, and when are bankers going to be ready to have a conversation with you about all of the things that are on the table? Because what I know that we've been getting questions from small businesses is around, how do we prioritize which thing we take advantage of? And how many times do we ask, to not pay our mortgage or not pay our rent, and then end up in June with an enormous, maybe 3 times of the expenses that because you would have been accumulating those expenses.
So here's what's interesting. When Congress passes a law, they say now, it goes into effect now, but their hearts are in the right place. Believe it or not, I just said that. Their hearts are in the right place on this. However, getting the money out is needed now to prevent what they're trying to prevent, which is a recession and on and on. But the actual deployment of funds and all of that is going to take longer. I have heard that it may be actually months for some of the loans, or some of the money to get out. I don't think that's going to happen. I think the White House and Treasury Secretary Mnuchin is exerting a lot of pressure for that to not happen. And so I think it's going to be shorter, but I don't know how short. So for if you are someone who's going to get a physical check, it might take longer than if you're someone that's going to get an automatic deposit. I do know this, the IRS and the Oregon Department of Revenue have some employment issues of their own right now. They are also facing social distance and how do they operate in this environment. Banks are also facing this, so they've got a shortage of employees that they're coming together. I do know so I don't know what the government, how long they're going to do it. What I am hearing, I checked this morning, and then what I was hearing yesterday is I do think we're probably 2 to 3 weeks maybe for the SBA loan packages, particularly on the Paycheck Protection Program. But I don't know any more than anybody else. That's just what I've been reading for that being available. And, you know, we saw the Mercy ship Comfort get to the port in New York a week or 2 ahead of schedule. So magnificent things are being done. And, you know, where there's a will, there's a way. So who knows what pressure is being exerted upon the SBA to do it. Now, bankers have their own issues. I do know when this was all first going down, most of us who have a banking relationship, we were getting calls from our bankers because our bankers are wanting to say, hey, listen, talk to us about any loans you've got outstanding with us. We're going to work with you. You work with us. Let's keep that communication open. The beautiful side of what we're facing is that we are, as you said at the beginning, Deanna, all in this together. And there isn't anybody in this chain of business, supply up to lenders, buyers, all of that, that doesn't recognize what's happening. And so when there is a way to work things out, my daughter is a hairdresser. She can't do her work, and she leases a chair. The owner of the salon told everybody, listen, I'm going to accept 40% of your normal lease in concession. And so they're now going through and working out what does that mean. But she, you know, the owner of the salon didn't say, I want 100% of your rent. And then she's getting some relief from her landlord, and so on and on and on. So everybody's working on it together. And I think the best thing that we can do is, you know, call up our creditors and talk to our employees and share information. And people have been doing great things, but I don't know on the timeline on a lot of this.
So we had one other question come up. Does payroll apply to only employees or also to business owners?
So it depends if you're an S Corp or not. If you are an S corporation pulling a salary out, it may apply to you. It does not apply to partners. At this point, as far as I understand, does not apply to partners or sole proprietors. There are some carve-outs for self-employment tax, that would apply to sole proprietors and partners that are treated as self-employed. But for the term employees, it would include S Corp shareholders that are pulling a W-2 wage.
Katie, it is 11 o'clock. I can't thank you enough for joining us and being our first guest on our Small Business Solutions series. Truly appreciate all the information you provided. Thank you all to our attendees for being a part of the program. If you have other experts you would like to see, please send me information and we'll make sure that the Small Business Entrepreneurial Council, who's organizing these programs, has that information. We plan to be here every Tuesday, Wednesday, and Thursday from 10 to 11 with a different expert addressing a different area of expertise and a different issue, and hopefully providing additional solutions. Thank you all and have a good week. And if you need anything, please know that your Chamber of Commerce is here at the ready. Thank you.